The focus right now, or to date, has been largely around cultivation and expanding capacity. But this is going to be a branded consumer business. I had 25 years with Procter & Gamble and came into the wine industry from there. This is actually following a very similar route. I mean, if you think about the beer companies, the wine companies, they don't produce their own hops, barley, or even grapes. It's third-party cultivation. There's value creation there, but it's much more in the manufacturing, the innovation, bringing new products that consumers know and love and trust to the market. This will be a consumer packaged goods business, and that's what we're focused on building, is an organic brand, which is a sizable part of the market. We really want to be the Whole Foods of cannabis.
Meaning green, meaning organic cannabis. So
yes.
The point from here to that point is a very long path, and right now it seems like it's all about cost per gram and lowering that, and everybody is sort of in this search and this effort to lower the cost per gram. So where are your costs right now? Have they been coming down? And will you need to raise capital?
We're currently building our two facilities, one in Hamilton, 150,000 square feet, and in Valleyfield outside of Montreal, 1.1 million. So our facilities are actually coming online later this year and into next year in stages, which will start growing, and we'll start selling into the medical market starting in January, and then we'll be expanding as we go through 2019. Across medical, and then province by province. By the end of the year, we'll be fully national in Canada. But despite that, we'll still have revenue outside of Canada in advance of that. We just purchased a company in Poland, which is industrial hemp-based. They're selling in 13 countries in Europe. So we'll have our revenue outside of Canada before
Brian,
we actually do in Canada.
I'm sorry to interrupt you, but we're short on time, and I got to get the answer to these questions. What is
Sure.
your cost per gram? What's been the trajectory of your costs, and will you need to raise money?
So we're not actually selling today. So with our production up and running, we will be below $1 per gram in Canada. We're less than half of that in our Jamaica business already. In terms of raising money, we are funded for our domestic plan in Canada and part of our international expansion. But our goal is to be the largest organic brand globally. So we will for sure be raising money for further global expansion at some point.
So when you become the largest brand organically, what percentage of your business will be dedicated to and focused on the medicinal product, and what percent will be focused on the recreational product? Question two is, can I take the medicinal product and not get high?
Yeah, so in the medicinal market, you have a combination of THC products, which is psychoactive, gets you high, as well as CBD products that do not. In terms of in Canada, where you have a recreational market, the medicinal market will be probably less than 10% of our ongoing production. A bit higher to start with, but it'll go down as the recreational grows. As you look globally, in Europe, it's really only medicinal from THC products. But you do have CBD products which are not regulated. They're legal in most countries. You can sell them in vitamin stores, health food stores, drug stores, not just pharmacies. That's where we're starting. So really there we're going to get our products out there and then build the sales and distribution infrastructure to start adding THC markets as more markets become medicinally legal. And then recreational will follow at some point later, presumably. All eyes are on Canada to see how Canada develops and how the recreational market grows. But it's a huge disruptor for many different industries, from beverage alcohol to pharmaceuticals, even to other beverages. There's discussions of some of the beverage players beyond alcohol looking at the space.